Ladies and gentlemen, the stock market blasted higher today, above all of your major moving averages. Okay, if you're looking at the headline S&P. Let me tell you right now, if you don't listen to this and take in these opinions and really, I want to say second guess maybe your own, sorry, you just might miss the new bull market. Okay, because that's exactly what this is. And I get it. Who am I? Who's this guy? Why does he, say you should listen to him? Although we've been incredibly correct here on this channel, basically calling the bottom and, well, the subsequent rally, back. It's not my job to convince you to listen to me or not. Do what you guys want to do. But there is a track record growing here. And, I think it's pretty obvious what's coming next. For a while there, it seemed, a little more challenging to figure out what was coming next. Like, is Trump really going to nuke the economy? Probably not. But how far is he willing to take things? I think we just kind of seen that. And here in this video, we will discuss the new bull market, where it is likely going to take us, and why I think especially if you are bearish right now, let me just move a little closer to the mic so you hear this. I don't think you're thinking very logically, okay? We're going to try to think as logically as possible throughout this video. I know logic, very hard to, understand for many people. I really do hope this video gets across to the bears the mistake that could be made by many people right now in real time that is not going to help their portfolio by any means. And I know for a lot of you guys that have been doing this for a long time, you're going to sit here and say it's obvious. Like, this is a new bull market. Like, this is a reset, if you will. We had it. We're past it. And it's business as usual now. A lot of you guys are going to get that. But there's a good chunk of people that do not understand the gravity of this situation. And we need to talk about it. So first and foremost, I want to explain this as simply as possible, okay? The markets move based on expectations, okay? Wall Street does a great job in pricing things in, okay? We've all heard this before. Pricing things in, it's pricing this in, it's pricing that in, blah, blah, blah. The best and easiest way to know what's priced in, while it's almost impossible to do so with certainty, is what is everyone saying, okay? What is Wall Street saying on CNBC? What are they saying on Bloomberg? What are the analyst notes coming out? And what is consensus within that? And let me tell you, consensus before this weekend was 50-50 in whether, the talks with China would even lead to anything. Okay, number one. Like, nobody was expecting an actual deal to come out of this weekend. And that's why the S&P moved up almost 3.5% today. Okay, that's it. Expectations. Our expectations were exceeded in a positive way. Okay, so that's what today was about. But I can tell you the evolving narrative on Wall Street is going to continue to shift. There's still a lot of people that are negative, okay, that are, bearish on this market, that believe the economy is going to weaken, and that just means, earnings are going to be pressured and inflation's going to be an issue still. And this China deal really didn't do much to solve that. What if I told you we are now in a much, much better position than 95% of folks on Wall Street thought we were going to be in today, okay? Last week, most people wouldn't have even dreamed that there would be a deal done today. Now, Wall Street's kind of in the phase of assessing the damage, assessing what changed, what damage was done. Let me tell you, the American economy is far more complex and strong than people think. We can all sit here and say we know someone that's having hard times, okay? We know people that are not doing well, that are cutting back. You see it. It's there. It's been there, in fact, for years. maybe we can start to get on a better trajectory. All things equal, I don't think there was as much damage done compared to what people think. In fact, 50% of the population roughly believes that, even a self-induced recession would be positive for America longer term. Whether that's true or not, now we're getting trade deals 50% of the population is going to love right off bat. And you're not going to have that recessionary impetus, okay? Because the big risk was shelves dry up in stores from a trade embargo with China. You have hyperinflation or even just moderate inflation that leads to real damage done within families, okay? Within, checkbooks of families. I can tell you now, that's not going to happen, okay? We're at a 30% tariff on China. China's going to crack down on fentanyl. I can game this out for you right now. That tariff's going to fall to 10%. China's going to open up their markets to the US. Wall Street is still in a bit of denial on this. They're still in a wait and see mode in terms of damage done to the economy. And from my view, there's probably far less damage done than current narratives are out there. If you still watch CNBC, they're saying, okay, this is great, but like the damage is done. We're going to see this show up in a couple of quarters. What about all of the other times in which Wall Street has said similar things, good and negative? Like, it's going to happen. Labor market's going to slow down. Inflation's going to pick up again. The fact of the matter is, I think a lot of Wall Street's going to be on the wrong side here. And that is where you profit so much. When Wall Street is all betting on the wrong thing, and then the other thing happens. And I think that's where we are right now. Wall Street is still very under-allocated to this market. They're still very much skeptical. Wall Street doesn't care. They'll chase, okay? They'll chase the gains. In terms of right now, here and now, it's time to position if you have not done so already. I am not a financial advisor. I am not a financial planner. Come to your own conclusions. But that's the best conclusion I have as of now. So let me give you my take on what I think is going to happen, okay? The trade war is essentially over, okay? Last time this happened in 2018, markets recovered. They came back, and 2019 was a volatile year, but especially towards the end of the year, it was really strong. There was a lot of the same conclusions being drawn in 2018. Now, I know a lot of investors started in 2020, so a lot of investors don't have this back knowledge to go off of, but there's a lot of similarities. It's eerily similar in terms of the narrative in markets right now compared to what it was in 2018, 2019. This damage is going to come. The damage is going to come. The damage is going to come. The U.S. economy is very resilient, and I know that term gets thrown out a lot, but that's why we don't go into recessions very often. It's hard to have a recession, right? Because businesses, corporate America, can navigate problems very well. It's these big shock events that usually causes recessions. But it usually has to do with the labor market also breaking. And I just don't see the labor market breaking right now, especially not with the essentially China trade war coming to an end here. And I know nothing's been signed yet, blah, blah, blah. Those are nuances. Like, you're engaged to your girlfriend. You're going to get married in 2 months. Sure, you're not married now, but you're almost married, okay? You're basically married. Or you can even be more extreme and say, next week you're getting married. Like, you're not married, but you're kind of already married, right? Point being, it's essentially over with. Now, what does this do? This dramatically raises the odds that the Fed is going to cut rates multiple times this year because inflation is essentially dead, okay? Which, rate cuts? Come on now. like Trump said, that's the jet fuel to this market, or will be, okay? And I think we'll power another 20% rally or so within the next 6 months. I think markets could go up another 20% by the end of this year. I know, sounds crazy. 700 on the SPY is far off of where a lot of folks' current consensus is, okay? What this also does is create more certainty around earnings. It allows businesses to navigate any, hiccups that they had, get back to business as usual, okay? Can start to give us more of a formal guidance. It, again, dramatically lowers the odds of a recession, which is obviously great. And from, the perspective of the last 2 months, earnings have been revised lower. The multiple has been pushed lower. What if over the next 6 months we start to get rate cuts, economy holds up, the multiple can go back to maybe where it was, 21, 22 times next year's earnings, but earnings actually exceed expectations, okay? Mix that with hedge funds and institutions that are underpositioned in this market, and you have a very potentially optimistic scenario. Mix that, cherry on top of the sundae, if you will, deregulation, lower corporate taxes. Yeah, I think it's hard to be bearish right now. Like if you are bearish right now, you are really reaching for something. I don't understand what it is. It's like saying, you die tomorrow. Okay. Sure, there's always the risk of that, but what are the odds of that? Probably 1 in 28,000 roughly days we live, average human lifespan. The odds are not great, so you should probably prepare for the next day, okay? Not to get too off track here, but that's kind of like what Wall Street is saying right now. Like, what are the odds that things are good? They're saying they're low, okay? And they're assigning much higher odds of a worse outcome. I think the odds that this is the start of a new bull market are a lot higher than people want to think. 60, 70% or so. Unless there is some dramatic shifts in the, relationship between the US and China, I doubt it. Imagine this. Imagine if US companies could even get access into China. Like Google, Netflix, Microsoft, Amazon, none of those companies have a presence in China. Apple, Tesla, Nike, Starbucks, like some companies do, but most of the Chinese market, as Trump has said, is closed off. Okay. Imagine what that could do for corporate America. That would be huge. Okay. Just getting those companies into China alone. So there definitely is a much rosier potential outcome here than Wall Street is currently expecting. And I think it could charge a 20% rally in markets over the next 6 months. And by 20% in the headline S&P, you're looking at like single stocks that could rally 50% from here. Okay. I don't want to list names, but maybe that's a Square, maybe that's PayPal. I think fintech should probably do pretty well in this environment. That is some of your semiconductors, okay? There's going to be a focus again on AI. Robotics is going to be huge over the next, decade. Like, there's some stocks that could really do well here. And that, I think, is the bigger opportunity, not just 20% on the headline S&P. I think this could be a much more aggressive rally than most people think. So let me know what you guys think about that down below in the comment section. I just wanted to, share my thoughts because I see a lot of people that are bearish, a lot of people that are, second guessing themselves, and, it's basically over. The faster you realize that, usually the better, unless something changes, in which it doesn't look like that's going to happen. Obviously, I'm not a financial advisor, so come to your own conclusions and do your own due diligence. I'm just sharing my opinion, what I'm doing in my portfolio, which is buying. I have been buying and will continue to buy over the next month or two. So let me know your thoughts down below. Have a great rest of your day, and I will see you in the next one.